Hi everyone. If you are thinking about investing in the stock market, stop right there because today we are talking about a checklist you must go through before you put your money on the line. Think of it like packing for a big trip. You wouldn't fly across the world without your passport, right? In the same way, you don't want to enter the stock market unprepared. So let us go through the key boxes you need to tick before you invest a single rupee. So, why does this matter? Investing isn't just about picking the right stock or timing the market perfectly. It is about your readiness. Your financial health, emotional stability, and long term perspective are far more important than any hot tip or trending sector. Now, skipping this checklist could mean unnecessary stress, poor decisions, and losses you could have avoided. So, let us start with the most important one, and that is you. So, personal readiness is about financial hygiene. If your money life is a mess, throwing it into stocks won't magically fix anything. In fact, it may just make things worse. So, hold up, run through this quick 5 point checklist and ask yourself these questions first. Emergency funds. Do you have 3 to 6 months of living expenses saved? This is your do not touch stash for emergencies, so you are not yanking money out of your investments when life gets messy. Going debt free, still juggling credit cards or personal loans? I mean, pay those off first. Investing is cool, but it won't beat 20% interest draining your wallet. Long term horizon. Can you leave this money alone for 3 to 5 years? Investing is not a sprint, it is a long haul flight. In this, patience pays. You need to have a stable income. If you have a stable income and working budget, this means you won't need to sell off your investments just to pay the rent. Emotional resilience. Now, can you handle seeing red in your portfolio without panicking? Markets keep going up and down. Now, your job is to chill and stay in the game. Talking of market conditions, how do I know when to invest? So, let us look at the external factors. When is the market itself in a good place for entry? Now, this doesn't mean trying to time the market perfectly, but it does mean being aware of the basic conditions before jumping in. So, here's what to watch for. Reasonable valuations. Are the indices like the Nifty at fair price to earning ratios? If things are looking overpriced, maybe wait it out. No one wants to buy at the peak. Look out for favorable interest rates. Are the interest rates stable or dropping? Now, lower rates means cheaper borrowing, means happy markets. Economic stability. Is the overall economy steady? Jobs strong? Inflation under control? A shaky economy can mess with even the best stock picks. Cautious sentiment. Is everyone hyped about getting rich quick in stocks? If so, then it is a red flag. Euphoria often means we are near the top. Recent dips or sideways trend. Has the market pulled back recently or been moving sideways? Now, this could be your opening. Buying after a dip beats chasing a rally. So, timing isn't everything, but being aware of the market vibes helps. Now, let us talk about your strategy. Being ready financially is one thing, but do you actually know what you are doing once you start investing? So, here's your next checklist. Long term goals. Are you investing for something 5 plus years out, like retirement, a house, or your kids' future? Short term money and long term markets do not mix well. Regular investing. Are you ready to invest consistently, like through monthly SIPs? It is not about timing the market, it is about time in the market. Investment understanding. Do you actually know what you are buying? If your answer is my cousin said it's hot, then it is time to do more homework. Diversification. Is your portfolio spread out? Don't put all your eggs in the same basket. Emotional control. Can you keep your cool when the markets drop? Panic selling is how paper losses turn real. So, having a strategy beats chasing trends every time. If you are good on all five, you are not just investing, you are investing smart. Let us talk about strategy and discipline checklist. Now, this final piece is all about discipline. It's one thing to make a plan and another to stick to it. The best investors aren't just smart, they are consistent, calm, and committed. So ask yourself this last gut check: do I have a plan for how much I will invest and when? Because random investing is random results. A clear plan keeps your decisions consistent and not emotional. Do I avoid checking my portfolio every day? Watching it daily won't make it grow faster. In fact, it'll probably just stress you out. Do I follow my strategy even when others around me panic? When the crowd freaks out, you can stay cool and stick to your plan. Now, this is what is going to separate investors from gamblers. So, discipline beats drama every time. If you're solid on all these three, you are already ahead of game. So, where do you stand? Now that we have covered all the boxes, take a moment, be honest with yourself. Have you ticked all these boxes? Are there areas you need to work on financially, emotionally, or strategically? It is okay if you are not there. What matters is that you know what to aim for. Let me quickly share a story of the parrot that bought stocks. There was once an investor who trained a parrot to squawk the name of a random stock every morning. Just for fun, he created a parrot portfolio where he actually invested a small amount of money into whichever stock the bird shouted. Now, believe it or not, after 1 year, the random portfolio outperformed several actively managed mutual funds. Of course, it was pure luck, but it drives home a point. Even a parrot can win temporarily in the market, but that doesn't mean it is a good strategy. So don't follow noise, tips, or random guesses. Be deliberate, prepared, and disciplined. Leave the parroting to the parrots. And there you have it, your pre-investing checklist. Tick these boxes and you will not only invest smarter, you will also sleep better at night. Guys, if you found this video helpful, give it a like, share it with your friends. Let me know in the comments which box was most surprising or eye-opening for you. Until next time, invest wisely and stay informed.